Dear students, in the earlier two sessions, we have discussed about the theoretical aspect and what are the receipts and payments of not-for-profit organization, how to prepare receipts and payments account, how to prepare income and expenditure account, and the balance sheet of not-for-profit organization. Now let's work out a simple problem. See here, the opening balance sheet is given, receipts and payment account is also given, and the adjustments are given. Before working out the problem, we have to read the problem carefully. Don't jump into conclusion just by reading balance sheet and receipts and payments account. Don't start solving the problem. Read the entire problem completely. After that, you have to go to working out the problem. Okay, now let's see what are the assets and liabilities which appear in the opening balance sheet. Opening balance sheet is prepared to find out the opening capital fund. For a newly started business concern, there won't be opening balance sheet. But here in this problem, we have opening balance sheet, opening cash in hand is given, sports materials are given, furniture, land and building, these four assets are given. Outstanding salary, current liability is given. Pre-received subscription or advance subscription, it's also given. These two are current liabilities, and the difference between assets and liabilities, it is the capital fund. Now let's go to the receipts and payments account. Receipts and payments account, as I told you, it is the summary of all the cash receipts and summary of all the cash payments. Cash means cash in hand and cash at bank. See here, receipts and payments account of a non-trading concern. See, opening balance is given, to balance brought down, that is the cash in hand. The opening cash balance which appears in the opening balance sheet, the same amount will appear as to balance brought down in the receipts and payments account. So before working out this problem, you have to understand and remember a particular point. Whatever the items which appear in the opening balance sheet, they appear only once, either in the receipts and payments account, or in the income and expenditure account, or in the balance sheet. The items which appear in receipts and payments account, they appear either in income and expenditure account or in balance sheet. The adjustments, the items which appear in the adjustments, these adjustments are to be entered twice. Either these adjustments are to be entered twice, once in income and expenditure account and again in balance sheet, closing balance sheet of the not-for-profit organizations. Now let's analyze the receipts and payments account. Opening balance is given, it is the cash in hand. Cash in hand in the opening balance sheet, the same figure is entered as to balance brought down. So you need not write this amount again in income and expenditure account or in balance sheet. Now let's see the other items. Subscriptions. Subscriptions, they are the amount received by the members, or they are the contribution from the members received annually. So every year we are receiving this amount. So since you are receiving them regularly, they are recurring in nature, so they are the revenue receipts. So where we have to write them? We have to write them in the income and expenditure account. Entrance fees. When there is no instruction, we must consider entrance fees as revenue item because they are recurring in nature, they are repetitive in nature. So they must be considered as revenue item. But in the adjustment, if it is given that half of the entrance fees to be capitalized. Half of the entrance fees to be capitalized. Capitalized means they have to be added to the capital fund in the balance sheet. So they are capital receipts. So half of the entrance fees out of 6,000, 3,000 should be revenue receipt and the other 3,000 should be considered as capital receipt and it must be added to the capital fund. Sale of old newspaper. Sale of old newspaper, it's repetitive in nature, it is recurring in nature, so it's a revenue receipt. Sports fee, it is also recurring in nature, so it is a revenue receipt. So here we made a distinction between revenue and capital items. Only the revenue items, they will go to income and expenditure account, and the capital items, they go to the closing balance sheet. Now let's see the payments. Salary paid, it is the revenue expenses. Revenue expenses are exhausted in one accounting period or within a year. When you pay the salary, the benefit of which is exhausted in 1 year, so salary is the revenue expense. Sports material, for a sports club, sports materials are the assets. Once you spend the money on sports material, the benefit of this sports material, it will not be exhausted within 1 year. That's why the sports material should be considered as capital expenditure. Investment. Investments, once you do the investment, the benefit of which will not be exhausted in 1 year. That's why it is a capital expenditure. Hence, it should go to the balance sheet. Postages, of course, they are revenue in nature. They are repetitive in nature. The benefit will be exhausted in a year. So, postage is a revenue expense. By electric charges, it is also revenue in nature. Upkeep of playground or grounds, it is also revenue in nature, the benefit of which will be exhausted in a particular year in which the expenses are made. Every year we need to do the upkeep of ground, so it's a revenue expenditure or expense. Then closing balance comes, by balance carried down. The closing balance, it will go to closing balance sheet. Opening balance, to balance brought down, it comes from cash in hand, that is the opening balance sheet, and the closing balance carried down, by balance carried down, it will go to the closing balance sheet. Opening balance sheet, closing balance to the closing balance sheet. Now let's look at the adjustments. Outstanding subscription for 2018 rupees 1000. Any outstanding, it may be receipt or payments, they have to be added to the concerned expense if it is an expense, payment or expense, or it has to be added to the receipt if the outstanding item is a receipt. See here, outstanding subscription. Subscription, it comes in the receipt side, so it's an income. Outstanding subscription of any particular year, it has to be added to the subscription, because while working out this problem, as we have discussed earlier, we note a point that outstanding of current year, it must be added. Take for example, subscription. Outstanding of current year, it has to be added. Advance or prepaid item of last year, it is given for the current year, it has to be added again. Advance of last year should be added. outstanding of last year, it does not pertaining to the current year, it should be deducted. Then advance of current year, it is given for next year. It has to be deducted. While considering an item to be added or deducted, we must think of a logic that any item or any expense or any receipt, if it relates to the current year, then only we have to consider them in the income and expenditure account. Outstanding of current year, it is unpaid amount of current year, it has to be taken into account. Outstanding of last year, it is not related to current year, that's why it should be subtracted. Advance of last year, the advance of last year is given for the current year, so it is relating to the current year, that's why we have to write or you have to add to the concerned item. If it is a receipt, you have to add it as advance of last year. If the advance is of current year which is given for next year, then you have to deduct it, because when you give the advance in the current year, it will go to next year, so it is not pertaining to the current year, that's why you have to deduct the amount. Under this logic, we have to work out the problem. See here, outstanding subscription for 2018 is rupees 1000. So it is the outstanding of current year, because we are preparing the recent payments account for the year ending 31st March 2018. So outstanding subscription, it has to be added to the subscription. Then, as I told you, adjustment should be treated twice, once in income and expenditure account and in the balance sheet. So once you have to add it to the subscription, and again you have to write them in the balance sheet. The second adjustment is outstanding salary as on 31st March 2018 is rupees 5000. So outstanding salary, it has to be added to the salaries. Salary 25,000 is there, you have to add 5,000 to the salaries, because outstanding salary relating to current year. Half of the entrance fees to be capitalized. So while recording entrance fees, half of the entrance fees, out of 6,000, half is entered in income and expenditure account. The remaining half should be capitalized, and it has to be added to the capital fund. Depreciate sports materials at 20%. Sports materials, here in the opening balance sheet also sports material given, and in receipts and payments account also sports materials with the date of purchase is given. In the recent payments account also the sports materials with the date 1/10/2017 is given. So this is the opening balance. While calculating the depreciation on sports material, you have to calculate depreciation for the entire year. 35,000, 20%, it will be 7,000. And on the purchases made during the year, it is entered on the payment side of receipts and payments account. This sports material 18,000 is there. On this you have to calculate 20% for the period from the date of purchase till the end of accounting period. Prepare income and expenditure account and the closing balance sheet of a non-trading concern. Now let's see how to solve this problem. So before working out the problem, we must note that all the receipts which appear on the debit side of receipt and payments account, it will come to income side or credit side of income and expenditure account. All the payments which appear in the receipt and payments account credit side, they will come to expenditure side of income and expenditure account. Now let's see the payments one by one. Salary. To salary 25,000 is given in the problem. salary paid 25,000. Now you have to see whether there are outstanding of current year or whether there are outstanding of previous year, advances of current year, advances of previous year. So in the problem or in the opening balance sheet, it's given outstanding salary 7,000 rupees. So outstanding of last year or 2017, last year's outstanding, it will not come to the income and expenditure account of current year because it does not belong to the current year. So you have to deduct that amount from the salary. The amount is 7,000. So it will come to around 18,000 rupees. Then the outstanding salary is rupees 5,000. It has to be added and total will come to 23,000. So salary, current year's outstanding is added, last year's outstanding is deducted. This item we have considered or we have taken this item from the opening balance sheet and we have taken this outstanding of current year from the adjustments. So whatever comes in the opening balance sheet, it has to be entered only once, as I told you, either in recent payments account or in income and expenditure account or in the balance sheet. So outstanding of last year, we have considered this amount 7,000 from the opening balance sheet. We have entered it here. So we need not write this amount again because it is entered only once. Outstanding of current year, 5,000, we have taken this amount from the adjustments. So since we have taken this amount from the adjustment, we have entered it here in the income and expenditure account and again we have to write them in the balance sheet. The next payment is sports materials. Sports materials, they are the capital expenditure, they will go to balance sheet. And investment, this is the item of capital expenditure, again it goes to the balance sheet. Then postage 400, no adjustment. Electricity charges 1,600, electricity charges rupees 1,600 for which there is no adjustment. And upkeep of ground 6,500. For this expenditure also there is no adjustment. So from the payment side of recent payments account, we have considered these items. But as we have studied, the income and expenditure account includes revenue receipts and revenue payments, and it includes the non-cash items also. Non-cash items means they may be the depreciation, there may be bad debts. Those items should be entered in the income and expenditure account. The next item is depreciation on sports material, which is given in the adjustment. On opening balance, you have to calculate 20%. It will come to around 35,000 into 20%. It will be 7,000. And on additions or purchases, in the payment side, you see the amount of sports material with the date, it is given. So addition 18,000, again 20% on this addition. Since the date is given, date of purchase is given, we have to calculate the depreciation from the date of purchase till the end of accounting period. So 6 months. 6 months means on 1st October, the sports material is purchased. October, November, December, January, February, March, 6 months. So for 6 months you have to calculate, this will come to around 1,800. So the total depreciation is 8,800. Since the depreciation is given in the adjustment, I have entered it in the income and expenditure account and we have to write the depreciation in the balance sheet also. On the asset side, we have to deduct the depreciation amount from the sports material. And in the balance sheet, we have to deduct the depreciation amount from the sports materials. Now let's go to the income side. What are all the incomes? The items which appear, the revenue items which appear on the receipt side, they are entered in income side of income and expenditure account. The first important receipt is subscription. Subscriptions received were 52,000. Now look at the opening balance sheet. In the opening balance sheet, it is given pre-received subscription or advance subscription. Advance subscriptions of last year, it is given for current year. So last year subscriptions, advance of last year, it is given in the last year for current year. That's why it is pertaining to current year. So you have to add it to the subscription. The amount of pre-received subscription for 2016 and 17 is 4,000. So total it will be 56,000. Then in the adjustment it is given outstanding subscription for the current year is 1,000. Outstanding of current year is 1,000. Whether you have to add it or deduct it. Anything relating to the current year, it has to be added. So total of subscription for the current year will be 57,000. So here we have taken this advance of last year from the opening balance sheet. Any item which appears in the opening balance sheet and recent payments account, they have to be entered once. The items which we pick from the adjustments, they have to be entered twice, either once in income and expenditure account and again in the balance sheet. See here, advance of last year, we have taken this amount from the opening balance sheet, it is entered, finished. Again, we need not write it in the closing balance sheet. The outstanding of current year, we have considered or we have taken this amount from the adjustments, we have written it here once and again we have to write it in the balance sheet. Now let's look at other incomes. Entrance fees are given. Total of entrance fees is 6,000, out of which 50% is revenue, 50% has to be added to the capital fund. So take 50%, it will be 3,000 rupees. Then two other revenue incomes are there, that is by sale of newspaper and the sports fees. Sale of newspaper amounts to 3,000 rupees and the sports fees 9,500. So I have written both the expenditure and incomes of current year. Then we have to balance these sides, both sides. We have to balance both sides. Find the total. The bigger amount has to be entered. So on the credit side, the total will be 72,500. And on the debit side, it is less. So write the total on both sides. Whatever the difference you are getting, write them as surplus or excess of income over expenditure. So here you will get surplus. The amount of surplus is 8. The amount of surplus is 32,200. The amount of surplus is 32,200. I have entered the total also. So here this surplus amount has to be added to the capital fund. Now let's go to the balance sheet. Let's see how to prepare the balance sheet. Now let's see how to write the balance sheet. First of all, you have to write cash in hand or cash at bank. From where do you get the cash in hand? When you refer the recent payments account, at the end of recent payments account, you have by balance carried down. So it has to be entered in the balance sheet as cash in hand. The amount is 19,500. When you see the cash at bank in the recent payments account at the end, then also you have to write cash at bank on the asset side of balance sheet. Then in the opening balance sheet, you can see some fixed assets. Sports materials, they are given. The amount of sports materials 35,000. For this, if you made any purchases during the year, sports material on the payment side of recent payments account, it is the purchase. So addition to sports materials, it has to be entered or added to sports materials 18,000, and any depreciation you have charged which is entered in the income and expenditure account, it has to be taken care of, less depreciation. The amount of depreciation is 8,800. So what is the amount to be entered in the outer column? So here it is 53,000. 53,000 minus 8,800, 44,200. Then furniture is there in the opening balance sheet. Write the amount as it is because there is no purchase and there is no addition. The amount of furniture is 21,000. Then you have investments. Investments 15,000. The items to be entered on the credit side, I have entered the opening cash, land and building, fixed asset, $90,000. Then you have outstanding subscription on the adjustment. It is once it is entered in the income and expenditure account, and again we have to write it on the asset side of balance sheet, that is outstanding subscription. Outstanding subscription 1,000. Now let's come to the liability side. Salary outstanding is given in the adjustment. It has to be treated twice. Outstanding salary, the amount is 5,000. Then we have to write capital fund. Capital fund is given in the opening balance sheet. The opening amount or the opening balance is 1,50,500. Any capitalized amounts to be added to capital fund. In this problem, entrance fees is capitalized. Half of the entrance fees is capitalized. Add it to the opening balance of capital fund, 3,000. Then whatever the surplus you get in the income and expenditure account, you add it. It will come to around 32,200. The total of capital fund will be 1,85,700. So I have entered all the items in the balance sheet. The items which appear in the recent payments account and the opening balance sheet, I have entered once, either in income and expenditure account or in the balance sheet. The adjustments which were given in the problem, they were treated twice, once in income and expenditure account and again in the balance sheet, either on the asset side or liability side. This is how you have to work out the problem. This is a simple problem. We shall work out little difficult problem in the next session.